Welcome to the Second Bite Podcast, where we talk with top entrepreneurs and CEOs about creating valuable companies through creative transactions. Now, let's get started with the show.
Welcome to the Second Bite Podcast. We have a really interesting episode today. Matt Rosenfeld from Crush Amazon is with me. Matt, I'm thrilled that you're willing to take some time and share the story of your recent transaction.
I'm thrilled to be here. Thank you for kind of all the assistance through the process. Happy to talk about it.
Great. I want to jump right into that. I want to start. Our sponsor is the good folks at Rise 25. Rise 25 is a terrific place. They actually help us produce this podcast that folks are listening to and watching. You can find them at rise25.com. They're terrific. They're a great sponsor, on and on from that standpoint. So I want to first, you got a great transaction done with the good folks at Acadia, and we'll break that down and we'll unpack all that. It's been about a month since deal close. What are the emotions like a month later? Has it gotten back to normal? Are you still on cloud nine? What can you say there?
Yeah, I think I feel great personally. I think what is interesting about the whole process is you go through it in your head, building up what you hope it's going to be like, and in an ideal state, what it's going to be like, and worrying about maybe if it doesn't go according to plan. My experience so far is that it's been exactly what I would have hoped it would be in that process. And we're leaning into, from an integration point of view, all the things that we needed to continue being able to kind of scale and grow at the rate we want to.
Cool. So here's the question then. I want to get an understanding for what was in your mind of what the end state would look like. What do you think the important points were along the way? But why don't we take one step back first? Crush Amazon is the name of the business. Describe who you work for, if you will, who your clients are and what you do for them.
Yeah, so Crush Amazon, boutique, full service, what we like to call Amazon operating solution. So we work with D2C and retail first brands to efficiently unlock growth within the Amazon ecosystem. And our whole kind of ideal client is a D2C first brand that ideally has not yet looked to sell on Amazon, knows there's opportunity there, and we can come in and help them efficiently operate the channel at the scale at which they're looking to do so. Or brands that are already on Amazon looking to optimize. We've got a fantastic playbook that we've built over the last couple of years, and we can come in and again help them fully operate the channel and scale.
And you educated me on this, because fully operate the channel, I always thought meant just market, just ads on the platform. You're a lot more than that, what I've come to learn. Explain that just a little bit.
Yeah, so there are two. We like to position ourselves, of course, for an agency, and we fall into this kind of marketing agency category. But when we talk to potential partners and when we talk about ourselves in the ecosystem, we call ourselves an operating solution solely for the reason that we truly operate the whole channel, right? Growth on Amazon is contingent on so many things that don't all come back to how much paid advertising and how efficiently are we spending it. It's how are we operating the logistics or supply chain related to Amazon? How are we managing days on hand inventory? Is our product expirable? What other things are going to happen that can throw off the way in which we're optimizing and competing against both the algorithm as well as our competitors? So all things content, copy, creative, days on hand, inventory management, logistics, everything related, account health, seller support, et cetera. We fully manage that for our partners.
And it is really like multi-level chess in the way that you guys are doing it.
Yes, it is.
Fascinating. And give me just a rough idea on the size of the business.
So yeah, the size of the business right now, we've got 32 people on the team at Crush. We probably work with 55 or 60 partners or clients. And our run rate in terms of revenue for 2025 will probably fall somewhere close to 6 million.
That's great. And your profitability was well above what I typically see for agencies.
Yeah, I would say our margin was very healthy, kind of above that average of 25 or 30%.
So, and you've been in business for really just 2-3 years, which raises the question, why would you do a transaction so early?
Yeah, it's funny because this is what you and I talked about so much early on is I think you start to realize as you're growing, and again, as context, this is my first time operating in the agency space as a service provider. So my background was in brand, and I built some Amazon brands myself And then now I'm operating brands for others in that kind of operator position. And you start to realize that as you scale, you need a lot of infrastructure to keep doing it. You need ops, you need finance, you need HR, you need marketing for the agency itself, right? You need all of these infrastructure things to kind of keep building the rails upon which you can scale. And ultimately, when we looked in the mirror at a certain scale, we started to say, okay, growth is happening faster than ever. We see a ton of opportunity with the exact types of clients we want to work with. We've got incredible talent on the team, but no one on our team has ever built that operating foundation. And you know that if it's something you've never done before, of course, that doesn't mean you can't do it, but it means you're going to make mistakes and they're going to cost money and they're going to cost time. And the last thing we want is for that to impact the quality of the results that we're able to drive for clients. And so the logic was our top priority going into this process was find somewhere that we could bolt onto and leverage that ops infrastructure, et cetera, to allow us to keep growing and offering and improve the quality of service without disrupting any of our current operations.
Yeah, the way I remember it, when we were talking, and this was like the end of 24, early 25, and you said to me, you know, that you had sold enough work already in 25 where you were going to double revenue. And I remember saying, geez, Matt, that's fantastic. And you said, yeah, problem is the wheels are going to fall off well before we get to the end of the year. And the thing that I thought was really insightful, A, you recognize that, but B, you had decided, I don't want to be an agency guy. I don't want to build an agency. I want to focus on what we do for on the Amazon platform. So I need to find an agency person that understands what we want to do, knows how to ingest us into their agency, and then go even faster. And that was really the assignment, right?
Exactly right. Yeah, it's exactly right.
And so let's go back then to what the image you had in your mind. You had not done a transaction before, yet you had built some of the product stuff that you had sold. What was the image you had in your mind? Why don't we start with that question first?
Yeah, in terms of, honestly, to be transparent, I didn't really have like a true understanding of what it was going to look like. I think I personally thought that maybe it was a little too early, right? Maybe we were going to find people where I didn't know kind of what the ultimate value unlock was going to be. But I think I knew what we needed to find was somewhere that had a very solid foundation, a background or existing competency in the areas we were currently being asked about that we knew we needed to expand into or start to offer to maintain kind of the client profile that we have today. And somewhere that wanted to let us just continue to be us. I think what we've built at Crush is somewhat unique in the way we operate, the types of hires we're making, the people on the team and the brands we're working with, and really would share that vision and then allow us to leverage their foundation to continue to grow on top of it.
And we ultimately, I think, found that in 2 or 3 or maybe even 4 partners.
Correct.
But you would expect as you go through the dating phase, let's call it, that people are going to tell you what you want to hear. How did you kind of sift through that so that you wound up with the partner that you thought you could really trust going forward?
Yeah, really interesting question. I think the answer also comes back to the questions that a lot of these partners asked us through the process, which gives you an idea of kind of what are they looking for? Where do they see value? What do they want to understand about the business model? And with Acadia, which ultimately where we ultimately went, they were asking questions that to me made it seem like they really understood what made us unique in how we were operating, but also understood where we wanted to go. So like they got where we are today, they could see where we want to go, and they were trying to understand what we thought we needed to get there and if they were the right partner to give us those things.
And do you remember any specific questions that were asked that made you feel like that?
Yeah, I mean, a lot of it comes back to how we built our operating structure internally, right? And we've built our business in a very specific way, right? That at a certain point, when you start layering on too many incremental services or channels or anything of the type, starts to falter a bit. We have a lot of resourcing associated with each account. we didn't kind of look forward to understand how does that cost structure scale? What does it mean for the economics of the business over the next couple of years? And what do we have to do to really put ourselves in the strongest foundation to continue being able to invest that way over time? And so they would ask me questions around, what is the logic of those team members? What's the resourcing costs associated with those people as these accounts scale? Which of those resources do you think are actually driving the highest return for the clients, right? So where is the client getting the most value? And then they understood without even having to ask. Basically, they would say, not even a question, your clients are probably asking you about X, Y, and Z, right? And I would say, yes, that's exactly right. They're asking us about retail media. They're asking us about Target. They're asking us about Instacart. They're asking us about data analytics and reporting, right? How are we doing all of that? And that was and is Acadia's bread and butter. And so that it really did seem like everything we had on our radar, they had been building for years and are extremely strong in those areas. And it was exactly what our clients were asking us for.
And I know you had the fit with Acadia because you fit into, what your weakness, their strength, and vice versa. There was others though that were already in the Amazon space and were going to be bigger in the Amazon space, was their thesis. Was there one of those that just was more attractive to you in terms of being the Amazon piece to a bigger puzzle as opposed to joining with a larger Amazon agency?
Yeah, I think in my mind, it was harder to blend two very different, I think, approaches to Amazon together versus trying to essentially saying what you have right now in the way you're operating. We understand it. We think it's unique. We love it. We want you to continue doing that. And then we are going to figure out how to plug that into all the existing services that we have that we're extremely competent in versus trying to say, all right, how can we just take two similar offerings and kind of bring them together? That was less, I think based on the feedback we've gotten from clients over the life cycle of our business, that was less exciting for us.
I don't want to forget to ask you, so I'm going to throw it in there now. You were growing rapidly, right?
Yeah.
You're going to literally double during the year. And the deal contemplated that, and the structure of the deal, you did an asset transaction, but there's consideration for your performance going forward. But even with that, is there a part of you that just says, I mean, we're growing so much, maybe I just should wait? Did you go through those emotions?
Of course. I mean, I think everybody does. I think it would be, I don't know if there's a world where you don't do that, but I think you also have to think about what does it mean to grow that fast, right? It means I personally have no time to think about infrastructure and ops and foundation, right? And at a certain point, you also have to think about, we have an incredible roster of clients. We have great partnerships with all of our clients across the board. The biggest thing we need to be conscious of is not disrupting the quality of those partnerships and relationships in the space. And I think this also ties into the fact that we do no sales and marketing. So our business is built on relationships, results, quality of those relationships over time. And so the most important thing for our business is maintaining quality of service and results with no disruption to the underlying business. And the concern is that if you continue to solely focus on scale and wanting to service that side of the business, that will falter. And so I think, yes, while I have an extreme level of confidence that we will continue to grow, I think that can very easily be balanced out in terms of the structure we were able to put together and incentivizing that growth and accounting for it in the structure of the deal.
So again, you had this in your mind, okay, we're going to go through this process. When you kind of got into it, I got a couple granular questions, but from a macro perspective, what surprised you about as you look back, what surprised you in the way that something went or the way that something turned out from just the whole experience?
It's a really good question. I honestly think the speed was surprising to me. And it was this idea, I don't know if it was, you might have said this to me or someone at Acadia may have said it, but time kills is the most likely killer of a deal. And I think I did not understand how quickly things would progress. Also, transparently, the demands of going through the process, due diligence, the amount of time put into it, the questions that were asked. And again, the way I was looking at this is going through this process made us 2 to 3 times better as a business, regardless of the outcome, if the deal had happened or not. We knew our business better than we did going into the process. And we built out, everything was updated just as it should have been. But I really do think the biggest surprise to me was the speed at which things moved. And what that meant from like how you adapted throughout the process.
What areas in specific of your business do you know better now because of the process that you went through, not just with Acadia, but from the others?
Yeah. Honestly, every single aspect. It's crazy. It's crazy to say that, but every aspect, like our fundamental resourcing cost on an account level basis, right? What is our average account level margin? How do we resource on accounts? What does bandwidth utilization really look like, right? How do we determine the most efficient breakdown of bandwidth and resource utilization? And what kind of trends are there across our highest value clients? Where are we driving the best results? What is that client profile? All of that was extremely surprising. And we actually learned some things that we did not think were true coming out or going through the process.
For those listening, if you go to the search bar online at secondbytepodcast.com and go to Chris Peer, Chris, we ran a process for last year. Some things shifted in his business a little bit. We wound up not doing a transaction at the time, although I'm quite confident that we will. He was on the podcast and he wanted to come on the podcast and said essentially what you just said. I know my business now better than I ever have because I know what it looks like looking out. Now I know what it looks like from the real world looking in. And we are so much better as a business and as an org, just from going through the process. And I would also imagine that you understand the marketplace better of competitors and college and all of that. Is that true as well?
Could not be more true. I think just understanding, like getting an understanding of people you frankly would never have talked to. You wouldn't have been in the same room to have a conversation with them, to hear their opinions. And I think, again, it is kind of this courting process that you go through, and you're in a very open environment where you get to ask extremely candid questions that you would not be able to otherwise. And so the amount of learning that we were able to do, asking those questions to various parties that are involved in the ecosystem, that information is incredibly valuable.
It really is. And as a general rule, I think I said this to you, you should never ask a question that you're not prepared to answer from the buyer's side. So you were always great about saying, well, this is how we do it. How do you guys do it? Right. And
exactly.
You learn. And so one thing that I remember being interesting was kind of the sticking point, and we worked through it. Part of the reason you guys are as successful as you are is that you have really good people, right? Employees, yes. Top of their field, compensated probably a little bit better than high end of the range. And whenever you take a dynamic like that and you put it into a larger ecosystem, it creates some vibrations. How did you guys kind of, and that was the case, right, with Acadia. How did you guys talk about that, think about that, and ultimately work through it?
Yeah. So I think I'd start by giving credit to the team on this question of, like, I think our biggest differentiator is the quality of our talent. We have, in my opinion, some of the best people in the industry, kind of bar none, regardless of where they are or what they're doing. Incredible talent. And that's the number one piece of feedback we've gotten from clients for the life cycle of our kind of existence, is the talent is better than anyone we've worked with. As a function of that, you have to pay for talent. Talent isn't cheap. And so we always opted to pay for it. I think the answer, it honestly ties back to how we also accounted for the fact that we were growing so quickly, right? This added incentive in terms of kind of what an earnout looks like or what that future compensation can be tied to bottom line, right? So EBITDA performance. And so to a degree, those salaries are my responsibility, right? They're the responsibility of our P&L. And so to the degree that the business model continues to work, accounting for those salaries, and continues to be the fundamentally healthy business that it is, I think you work through the fact that while we may have a different ethos and we have to align a different ethos right now, we have to align on what it's going to be moving forward. And I think we have a very similar shared vision of that for the future. In the current moment, that is still a function of our P&L, and we own it, and we have to be the ones that make it work for our business.
And that's because you guys have an earnout. I also think it's very interesting that you pay, let's just, to make it simple, you pay at the high end of the range for the people that you have. Maybe more, but let's say high end of the range. Paying your people high end of the range, your EBITDA margin is still well above high end of the range for your peers. So I think there's a good lesson in there. I know that there's a zero in terms of sales and marketing. So, that certainly compensates for it. It's an interesting dynamic, I think, to how you got there, because that was your ethos from the very beginning.
Correct. And I think even tying it into the zero that we have on sales and marketing, I think you could spread out a sales and marketing budget that would comprise a portion of everybody's salary, because those people, the reputation they build, the relationships they have with clients, and the results they drive, that ultimately drives referrals. And I think that is a key thing to remember.
So now let's stick on employees for a second. So you get a relatively small team and a close team. What was the decision process like for you when you would roll this out, when you would tell people who you would bring under the tent? Maybe you could just talk about that for a few minutes.
Yeah, I think laying the foundation, every hire we've made, I've been extremely transparent with about the goal of Crush from the time we started was to, at some point, be an asset that someone wanted to acquire. And so we were very transparent about that was in the future. That's what we're trying to build towards. And we want to make sure we have the best business to be able to do that. I think when we were going through the process, there are certain people on the team that are critical to business operations and understand components of the business better than I do at this point. And so the way we went about it was looping in people as needed to make sure that we were able to provide the clearest picture of how different units of our business operated through the process. And then it went kind of down as you would expect. So we would loop in highest level kind of C-suite executives that are in the space, leadership team, and then rolled it out to the rest of the team once it was done.
And you talked about the due diligence process and how challenging that was. Did you loop in people to help you with due diligence, or did you kind of keep that to yourself? And regardless of your answer, would you have done it differently?
So 1, absolutely loop people in. 2, could never have done it myself. 3, would tell everyone to loop everybody. Like anyone that's necessary to loop into the process, I would. It is there is no world in which I could have done that process alone. It would not have happened. We would not have had. It
wouldn't have happened in the time frame it did. That's for sure. Right.
It may not have happened at all on it if I'm honest, but yes.
And to comment on that, what happens oftentimes, it is time consuming for sure. And when you take your eye off the ball and revenue goes down, that kills deals. Deals. Yours was so much easier because your trajectory continued to go up and to the right. And because go ahead.
We had our best 2 months in the history of our business going through the due diligence process.
And so I also think that, and you are, as you said, 6 million this year, a relatively small business. It's perhaps more difficult as you're larger, but regardless of the size of the business, the notion that we are building an enterprise here that other people will value, and for us to fulfill our vision probably means we're going to have to take on money from somebody, become a part of something larger, play a different, whatever it may be, shouldn't be a threat to anybody, right?
Yeah.
And particularly if it's a thoughtful transaction, and particularly because you're going to stay on board and you've got an earnout for a period of time and other incentives and the rest. And I will say, Acadia was Ad Age Best Small Agency of the Year last year. Jared's got a long string of success in his career.
There's Ad Agency Executive of the Year this year.
It's a good place to land, right?
Exactly right.
And the fact that a guy like that would choose an organization like Crush is a great validating statement, right? And when you do it with money and capital and commitment and people, that's truth speaking from that standpoint, right?
Completely agree. And I think that was going through the process. I think it showed a lot about who Acadia is and who Jared and Sean are and how they went through this process, which I think aligned very, very well with the way I think about our business, the way I think about our people, the future of the industry, and where I think we can continue to unlock and drive the most value, both for everyone on the Crush team, the organization as a whole, and of course our partners.
And I would say too, both Jared and Sean, the two owners of Acadia, and anytime you go through a transaction, there are, let's call them difficult conversations about employees, about roles, about economics, whatever it might be. And Jared would lead into those conversations by saying, listen, we need to have a hard conversation.
Yeah.
And the thing I really appreciate about him is that he doesn't come with, we're going to have a conversation and I'm going to hammer you with the end result. He comes with, we need to talk about this and understand how we blend the two things that make it work. And we want your feedback. Here's how we're thinking about it, Woody. And I find an environment like that creates enough room for the people in the room to come up with a conclusion and a solution that works very well for everybody.
Agreed completely. I think the number of times that they came to the table saying, hey, this is the potential issue that we're thinking about. We don't have any idea what the solution is, but we want to get you thinking about it as well. It made you feel like you were an equal part of the process, right? Going through it, where we were all working together to find what the most beneficial outcome would be for the future joint party, which I think was really unique.
It is. And if I can just put it in context for folks listening, there's a skill set you're bringing that they don't have and they don't know and they need. So last thing I need is to have an angry, disgruntled Matt walking around the office because we didn't do something right and didn't talk to him, didn't address him right. That we can't have. Other circumstances, for example, if you would have gone to another agency that does Amazon work, those issues might not have come up because they had already thought them through. But a lot of times when you're joining someplace to become a bigger part of that, they've got a lot of stuff figured out. They're 10 times your size. This is the way we do it here. You're joining us because we do it this way and because we're writing you a check for this amount. So get on board. And this goes all the way back to the early decision-making about what is it that you want to do? What's the role you want to play? How do you want to be involved in building something larger and bigger as you move forward? And I think because you were so well aware of what the outcome was or what the outcome you wanted, that made it easier. And I think because we spoke to enough people along the way,
yes,
you had enough of a sense that you were in the right place. Is that fair?
100% agree. And I think what I really enjoyed about the process and working with you was we were able to have a lot of very, very productive and insightful conversations at the right times, such that it was very easy to look at different groups and understand what are the differences here. How are they speaking to things differently? Like it was very tight in how it was run, and that made it a lot easier to go through kind of the different stages of the process.
Yeah, and after a bunch of years of doing it, there's personality types for buyers. There's fits for pieces that they're looking to put together, and all those things go to contribute to that. As an example, we just had an episode come out the other day on Outliant. They wanted to leave the business, and so I needed to find a buyer that does franchise marketing.
Yeah,
that wouldn't be intimidated by those guys leaving. If I were to find a buyer that wants to get into franchise marketing and the team's leaving, that would be a real big problem for whoever that buyer is.
Totally.
And so understanding the objectives obviously is an important part to arrive at the right place. So again, it's still settling in. It's been about a month. How do you think differently about who you are now? Like, how important is it that you built something and somebody wrote a pretty significant check? What does that feel like from a validation standpoint? And then how do you think differently about where you're going over the next few years?
I think it's very validating. I will say it is extremely validating of the work, the hours, the sacrifices that you make to build the business. But I think even more so, the decisions that you've made over the last 3 or 4 years without much certainty as to if they're going to pan out to be right or wrong, right? Throughout this process, you're growing this business. I've made a lot of decisions, right? Going all the way back to compensation and people and structure and no sales and no case studies and no decks and all these things that were way out of the box that I had no idea if they were going to be right. They were right for us now, but maybe they weren't going to be right in a year, or a buyer was going to say, that's crazy. There's no way that's going to be a fit. And so I think it was very validating to understand that you can really build the way you think is right. And your clients are going to be the ones that are going to tell you if it's working for them and if it is the right offering and the right service. And I think so long as you can continue to do that with the right partners, there will be somebody that will see the value in it. And I think in terms of how I view myself in the next few years, what I think is really great about this partnership is that I don't feel any different, right? I think the incentives are fully aligned, which is always important. I feel just as much motivation to grow today as I did yesterday. I'm still checking every single thing every day, responding to people on the weekend, responding to clients, getting on calls, anything that needs to happen. You're still there and you still feel fully responsible for it. And I think what I'm most excited about is figuring out, what does Crush look like a year from now when we are fully integrated, right? And we figured out where we have the most synergy, and we can then leverage all the infrastructure and foundation that Acadia has built. We are this one organization with the most advanced, comprehensive offering in this space. And what does that enable us to then go do? How do we talk about it? Where do we talk about it? Who are the people that we're talking about it with? How does that start to change? And so I'm very excited to start building that out.
Answer this question for me, because I know one concern I hear that rumbles around out there is, now I have a boss and I don't want a boss. I'm an entrepreneur. I don't want to work for anybody. How do you think about that now in the environment that you're in?
Great question. I mean, I think about this all the time. I think what I've learned about myself over the past is maybe I'm not the best employee, right? That's probably not my strength in a lot of ways. But I think what is unique, or what I feel is surprised me every single day so far, is that I don't feel like an employee at all right now, at all. I have full independence to continue to make these decisions, right? We are still running right at the same pace we were before. My day-to-day is largely unchanged. And I think the way in which, again, it comes back to incentive alignment. I think Jared and Sean, Acadia as a whole, and to your credit, we're very thoughtful about how we structured the terms of the deal, such that the motivation is aligned to the idea of still being an owner, right? You're operating this business, your success, everything, financials are tied to the success of the business the same way they were before this ever happened. And I think that is hugely important.
And is it closer to feeling like I've got a partner now as opposed to have a boss now?
Yes, no question. It feels like a partnership. I do not feel like I have someone I'm reporting into every day or is sending me things I have to do. I think the unique perspective is I still have to do all the same things, and I actually don't have to do the things I didn't like doing before, which is great. HR, ops, finance, invoicing, all those things. That's where I think there's a tremendous amount of value. But at the end of the day, I still own the fulfillment of our service. I'm still the same person that hired all of my people. I'm still responsible for them, and I'm still responsible to all of our clients. And so owning that relationship and what's really important has not changed at all.
Got it. Couple of rapid fire things as we wrap up. You, at your size, did not have a CFO. I know sometimes people feel like, well, I should have taken a whole bunch of time to prepare my financials and to get all this done. How would you comment on that?
I mean, in my experience, I've never done it the other way. I've never had a CFO, so I can't speak to that side. But in my experience, it was not something that was a roadblock to us at all. I think we always prioritized having clean financials and understanding what was really going on in the business. So we had a good idea of what kind of the intricacies of our economics look like. Outside of that, I would say I don't think that is a very important hire if you're at a similar scale to where we are.
Got it. In-person meeting. versus this over the screens. How important is that, do you think, to making a final decision on your partner?
Extremely important.
I know you met with Jared and Sean, and I know you got a lot out of that. Was that critical for you?
I would say it's a must. I think maybe that comes back to who I am, but I think I'm a people person. I love meeting people. I love talking to people. I think you get a completely different side of somebody when you have their full attention in person. You can kind of see who they are and how they operate. And I think if you're that type of person, I think it probably benefits you, if anything, to go and put the time in and have that in-person time.
How important is having the right lawyer in the process?
Again, I don't have anything to compare it to, but I was extremely happy with who we worked with.
Jordan, shout him out. Jordan from Baker Donaldson.
At Baker Donaldson, extremely satisfied. We moved very quickly. He was great at helping us through the process. And I think you want, as you want in anything, someone who's competent, who's independent, who can walk you through things and you can rely on to get things done on the timeline they need to happen.
Yeah, and I've done a few deals with Jordan. His contact info will be in the show notes at secondbitepodcast.com. So then last question to wrap it. Somebody that's listening, thinking about doing a transaction, what advice would you give?
I would say think long and hard about what you want out of it. What is the goal, right? What is the outcome that you're looking for? What do you want the next couple years, right, of your life to look like? What do you want to work on? What do you want to spend your time and energy working on? But at the end of the day, I think if you're contemplating doing a transaction in the next 2 or 3 years, I would honestly say going through the process is helpful anytime. Like if I would give advice to myself, I would have said probably go through it earlier and just go through the due diligence process, understand what it's going to look like, get your business in a place where you are even healthier than you were going through it. And you will come out of it, regardless of if it's the right time to actually do a transaction or not, knowing your business and knowing where you should be spending your time and energy much more clearly than when you went into it.
It is, I oftentimes say, it's really some of the very best consulting that you can get, because you will get feedback from people that know the space very well, that own a checkbook and that don't really care about your feelings.
Yes.
And they'll tell you what they think and why, and you can agree or disagree, but they have the checkbook, and this is the audience that you have to please at some point in the future, right? Or at least one audience to please at some point in the future. And for anybody listening, if they want to talk about that, you can certainly track us down through Second Bite Podcast, and all of our contact information is on the show notes. Matthew, congratulations to you. Congratulations more so to Acadia, because it's a great case and a great fit for them. I know that the team there, Jared and Sean, are super excited to have you guys on board. I will reach back out to you in a year, and you can tell us how the implementation and integration has been going. So we will follow up with you there. And I really do thank you for making time today.
Yeah, and I was going to say thank you for everything through the process, all the help, the insight, the partnership. Thank you again for everything, and can't wait to catch up when we do in a year.
Fantastic. It's always great to have an excellent result, Matt. Thanks so much.
Thank you.
Thanks for listening to the Second Bite Podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.